Hello and welcome everyone to this session of Project Inclusion's crypto research project. We have today an interview with Mr. Khalid Howladar, the Senior Managing Director and Head of Credit and Sukuk Advisory Business at RJ Flemings. He is a partner at Accreditus, a startup investing in advisory business, and he is the chairman of the advisory board at Marhaba DeFi, a halal, ethical, and values-driven DeFi platform. Before these positions, Khalid was Moody's Global Head of Islamic Finance and Head of the GCC banking team. Thank you very much for having us, and thank you very much for being with us today. Can you please share a little bit about your background and how you got into the space?
Sure, and thanks, Ramsey, for the opportunity to speak, because it is a pretty fringe topic, and it's good to get the word out. Get more understanding of this space. Not to simplify it as crypto, but there definitely is a lot of potential negativity from policymakers, market participants, and a lot of it, I think, is based on sometimes a misunderstanding. But back to my background. Look, I am actually an old school CFI guy, as probably betrayed by my lack of hair and beard. I worked at Credit Suisse, defining part of my career at Moody's, 15 years there, had a ringside seat to the financial crisis. So I know exactly how it happened, why it happened, and actually the incentive structures within financial systems that cause market participants to behave in a way that actually a crisis like 2008 was absolutely inevitable in the sort of neoliberal capitalism system that we've set up. So yeah, very sort of straight career, very non-entrepreneurial, head down, doing my little part of the financial system. And about 5 years ago, still, I'd like to think relatively young, made the jump into entrepreneurship to set up my own advisory firm in credit. And that was mostly my niche of credit ratings, because I was global head of Islamic finance at Moody's, Sukuk structures, Islamic banking. I was also head of Middle East banks, which was conventional and Islamic banks. So I had a good overview of banks and the banking system, as well as some of the theology that underpins Islamic finance, which simplistically is about non-interest-based lending, which is like an inconceivable concept when you think about financial systems today. So once I'd set up this advisory, I actually started angel investing in startups. Over 5 years, I've done about, I think I'm on my 15th investment. Theme, if I had to pick one, is of innovation stroke impact. So I've done everything from mental health psychedelics to green crypto, now to halal DeFi, fintech companies, food tech, a whole bunch of stuff. But mostly there's some kind of innovation or impact, as well as a personal connection. And then most recently started taking LP positions actually in funds. So DeFi, crypto. So this really started for me about, what would I say, COVID makes timelines confusing, but middle of 2020 is probably when I started looking at this, because I'm, as a sort of capital markets person, and mentioning the crisis and looking around at the quantitative easing or money printing that's going on, what the effect it's having on equality, inequality, I should say, inflation. There's a lot of things that are going to hurt middle and lower income populations. And so I became much more focused on just money itself, and this fiat money versus gold-backed standard money and cryptocurrency, Bitcoin, where does it all fit together? And I've become, I would say, rather sort of almost evangelical about the possibilities of cryptocurrencies along with the associated infrastructure. So for me, a 25-year career, I genuinely believe we are at the cusp of a paradigm shift. I think you can put a bank, an entire bank, you can put it entirely into smart contracts on a decentralized protocol. So I can't overstate I think the importance of this technology shift. And so for me personally, I want to orientate myself, my investments, my career, or what's left of it, into this area, just because I think it's so powerful on multiple levels. So just to close, so last year I was approached by, I get approached by a number of different fintech projects, but my bandwidth's limited. These guys at Marhaba, trying to launch the world's first halal ethical crypto was something a bit different, piqued my interest. And then having now been in a sort of crash course with a bunch of very talented entrepreneurial crypto savvy people, but I'm the sort of, let's say, the Gandalf of the team. I'm even more of a believer as to its change potential. And that sort of brings us to the present day, where I still have a foot in credit markets, but pushing further and further into crypto and DeFi because of its change potential.
Before I get into Marhaba and more specifically into DeFi, which I definitely do want to do, it'd be good to get your insight on what attracted you to this space, and what do you think in terms of decentralized finance? What is the power that it has and the potential that it has? And given you have this experience in the traditional banking sector, how do you see that moving?
So look, I'm a technologist. My undergrad, my master's was software engineering, etc. So I've always been attracted to the power of technology as a liberating sort of force. As to CeFi versus DeFi, or centralized finance versus decentralization, to sort of take a step back, I mean, look, most of us probably live in capitalist economies where we believe the private sector does a much better job of, let's say, centrally planned business activity. And I think you can take that sort of thesis and go all the way down to the individual, where in terms of financial activity, investment activity, devolving down the activity as close as possible to the person who it affects, you maybe get better outcomes in terms of decision making that actually suit that person better than part of a more centralized system. And if we were going back 20 years, I think it would be a much more hypothetical question. But why I've sort of trended over to the proverbial dark side, as it were, is that since 2008, I've seen a repeated failure of centralized institutions, monetary policy, to look after the people at the bottom of the food chain, to look after the people who are outside the system. And one of the reasons why people are outside the system is the cost. Now, technology is, in the modern day era, technology, you can service anybody, even if they've got a $10 balance in their account, but these are not interesting to the big centralized banks. When you do something in a decentralized way on a public infrastructure like a blockchain, the community maintains the infrastructure, which has its cost, but they're rewarded in coins and tokens or in other incentive mechanisms. So when the technology infrastructure is looked after by a community, actually you and I can start to interact on somebody else's infrastructure. Well, when I say somebody else's, it's the community infrastructure. So decentralization for me is a way of pushing down financial decision-making, financial freedom, financial ability to the level of where it affects people more personally. Education is a massive challenge. Maybe some people aren't equipped to be their own personal bank or to finance their friends, etc. So education, consumer protection, KYC, AML, these are still massive challenges, but I can just see from the last 2 decades, the system is visibly failing. So I think it opens the door to an alternative approach. And I'm not saying that, centralized banks don't have a role, because trust and brand is super crucial. 90% of people won't leave their Barclays or their HSBCs or their Santanders because they're safe, they're comfortable, there's someone I can call. Decentralization is very powerful, but it requires you to take responsibility for yourself. How many people are ready for that? I don't know. But can you also bake in protections into the system? So even though I'm sort of managing my own wealth or income or borrowing or lending, I'm somehow protected by the infrastructure. So decentralization is still at an early stage, still at a huge risk, but the idea of empowerment at a lower level, at a more micro level rather than a macro level, I think hopefully would lead to better financial asset allocation, optimal decision-making for personal situations, rather than saying, okay, this is a country, these are interest rates, this is how we lend and borrow, and either you're in it or you're out of it. And if you're out of it, well tough. And there's over 1 billion people unbanked. A lot of the problems in emerging market countries are linked to infrastructure. So decentralization is a way of maybe bypassing, or sort of, where countries have weak infrastructure. You have a global infrastructure that nobody in the country needs to pay for, but they can use. So yeah, no, I think there's a huge force for local empowerment, and we're at the very beginning, though, of that experiment, let's say.
How do you see that transition from, CeFi or centralized finance, as you're saying, to decentralized finance? What does the market need to see? What do consumers need to see, or what do you think these entities need to see? Maybe from a regulatory perspective, from a compliance perspective, from a proposition perspective, for it to become the norm? What does that transition look like?
So look, actually, DeFi is a bit of a misleading term, because there's actually only one truly decentralized blockchain, which is Bitcoin. And Bitcoin is non-programmable, so it's not actually suited for smart contracts and building, let's say, a blockchain bank. All the rest of the chains actually have dev teams, CEOs, and a lot of them are actually raising equity. Now, so there's a bit, even Marhaba, the one that we'll talk about later, has a dev team, etc. So pretty much all DeFi platforms have a nexus of centralization. Does that fit the libertarian ideology? Maybe not so much, but it is already a bit of a middle ground. Now, what I see happening is, I think the space will grow and people will start to transact independently, but more of a niche segment of sophisticated people that are comfortable with that. How you make it mainstream is when, and this is already happening, is when investment banks or commercial banks start buying stakes in DeFi platforms, equity stakes, which means they start to influence and control the direction. And do they then stick on their brand onto a DeFi platform, and then it's effectively co-opted into the mothership? So you've got a holding company structure with your bricks and mortar, branches, etc. What stops them from owning the equity or taking a majority stake or partnership stake in a DeFi platform and saying, well, why don't we integrate it into our customer base, where when you go into your banking app, If you want more control, well, guess what? We've got HSBC or Santander backed. And so you get the confidence and the comfort that I'm still dealing with a regulated institution. There's still somebody I can trust. It's still the brand that I'm sensitive to. But the protocols are peer-to-peer in a sense, but your bank is just screaming off a commission on every transaction. So incumbent banks have a terrible amount of legacy infrastructure. You can't do a big bang approach. It's just not feasible. So you let DeFi grow. They are becoming more institutionalized, better governed, better run. Some of them are going after institutional money, which means they're bringing in KYC, AML regulation. So then you've basically got a regulated DeFi institution. You've got your commercial bank, M&A, mergers and acquisition activity. I think you'll see a different form of banking consolidation. And then because the cost to income of this ecosystem is far, far lower, a bank is just a collection of processes. And actually banks are trying to remove the subjectivity of the human element out of it. You don't, and this goes to questions of employment and banking sector and so on, but you don't need all those employees if you can chuck it all into a smart contract. And so over time, there'll be, I think, a migration, and that's how you sort of ditch your legacy infrastructure without people realizing necessarily that, it's still Bank X at the top, but as you try to migrate them onto another part of the product base, which is run by smart contracts, for them, it's kind of seamless. And look, for the customer, they don't need to know what is the underlying infrastructure. Who cares? Like, how many people use the internet for a million different things? 98% of people have no idea how it works, and nobody cares how it works. Just that I can go on my phone, I've got my slick GUI interface. It will be the same thing for blockchain. There's no need for people to understand how it works. But the powerful thing is that if you're only using blockchain but not cryptocurrencies, it's like having an autobahn highway with a dirt road at either end. You've got everything integrated, and then suddenly you hit this brick wall of fiat money that you've got to convert. So that's why stablecoins are so important to the infrastructure, or central bank digital currencies. The moment you have cryptocurrencies, you have end-to-end settlement mechanisms. Back office, front office, middle office, customer, everything works end-to-end on the ledger. Your infrastructure savings, your efficiency gains will be incredible. And what it means to be a bit more mercantile, shareholders will make more profits. So, and we live in a capitalist society. So if you're not somehow pleasing shareholders, well then, we probably won't get very far. But there's a lot of compelling profit-based reasons as to why I think DeFi will be the way. But the term DeFi, I think, will be co-opted and misused, because if it's owned by Bank X, it's not really DeFi. They can come in at any time and switch off everybody's account or wallet. So you'll have true DeFi, and then you'll have bank DeFi, which is not really DeFi, but gives you the impression of doing peer-to-peer activity under a banking umbrella.
I think it'd be good to go into more detail on Marhaba. If you can share a little bit more about the proposition. And I think, what Marhaba is doing is unique in terms of integrating ethical components or ethical principles, values, and the Sharia compliant component of a faith-based requirement for banking that the Muslim community has into this very fast emerging and fast growing sector of the world. What does that actually mean in practice? How does that translate into the technology, the infrastructure, and delivering something better for a consumer?
So look, the Cryptoverse is a pretty dangerous place, frankly, still. fraud, scams, hacks. And so even beyond, let's say, the faith element, there's an idea of how do we create a kind of safe space for the regular person. You mentioned, how does it go mainstream? Well, the first thing is you try to convey this idea of a safe place where the community comes first. Much of the cryptoverse, unsurprisingly, is driven by greed, and that's not necessarily a bad thing. It's just a different motivation. But the returns and profits available are still there, even if you try to run things, we believe, or the team believes, in an ethical and fair manner. Now, ethics is always a subjective sort of perspective. So the team, and mostly the founder, like a visionary guy, Nakib Muhammad, as someone who's a complete crypto tech fluent guy, he couldn't find how to, enter the space in a way that was consistent with his faith. Now, so to focus on the ethics of Islamic finance, and actually, there's actually a lot of commonality between the Abrahamic religions of Judaism, Christianity, Islam, and even the Greeks before. The simple one is this prohibition on interest, which is seen as usurious, or even from an incentive standpoint, it puts me against you. I automatically get richer the poorer you get. So you can argue it creates a bit of a perverse incentive structure where those with money just are incentivized to put people into debt and debt traps. And if you combine that also with the status of fractional reserve banking, the creation of money, non-backed money, we've actually built this mechanism where you can create something from nothing, money, put somebody in debt with it, and if they don't pay you back with something that didn't cost you anything to create, you can repossess their house, their car. So, I mean, it's too short a session to go into the theology of non-interest-based banking, but if we just assume for the time being that there is some benefit to society about having a system where financing is more investment-based or asset-backed as opposed to unsecured borrowing and lending, that tends to create consumption-driven societies, debt-based consumption. And just a slight digression, we're so focused on sustainability. We have finite resources, finite planet. If you have infinite money creation and you sponsor infinite debt and infinite consumption, how can you ever have sustainability when the only thing you can do with your money that you've created from nothing is to buy a physical asset? So I actually think sustainability and interest, debt-based consumption, all of these things actually come together. And that's why we have right now a financially unsustainable system, because the shark has to keep swimming for the economy to keep growing and moving. And the moment it stops, it dies. And so the government and people are trying to promote, take on more debt, spend more. If you're a saver, you're punished now. Inflation running 7–10% plus. So we're going to create a culture where saving becomes a silly thing to do. Spending, consumption, this is the opposite to sustainability. So if I go back to the ethical underpinning, so the source of the ethics is kind of, let's say, Islamic finance that's shared with Judaism and Christianity, this prohibition on interest. Also, the sort of common ones of not investing or anything to do with gambling or pornography or arms dealing, those sort of normal, which a lot of people hold. But you cannot get that in the cryptoverse. Now, lending for interest is a huge part of the cryptoverse because there's a lot of margin lending, there's a lot of trading, people are leveraging up. You have a lot of protocols that involve lending and borrowing. And so how do we build an ecosystem that doesn't involve any of that? So that's the sort of underpinning of Marhaba, to build an ecosystem that doesn't involve lending and borrowing. There will have at some point in the future. interest-free lending and borrowing, but to be continued. But the whole ecosystem will involve no unethical active gambling. This is also a big part of internet business or crypto business. So gambling, lending. So these businesses will be excluded from the ecosystem. What it means on a more practical level is that people need to dig right deep into the protocols and the tokens to see what is their source of value. So if there's a token where 80% of the value is generated by interest-based income, well, then actually our ecosystem will not allow that token within. So we have a wallet, the wallet has been launched. The only tokens that are in the wallet are those that involve no interest-based lending or gambling, et cetera, et cetera. So in addition to this sort of safe space in terms of fraud, risk, et cetera, we're also creating an ecosystem where you're not contributing to this debt-based consumption model, infinite consumption, et cetera. And on a practical level, it means that we have to screen these tokens and protocols one by one. And it's not just a one-off exercise, because these protocols and tokens can change day by day. On a monthly or quarterly basis, you have to redo the whole exercise, because something that was compliant before or deemed to be halal before is no longer halal now, and you have to remove it from the ecosystem. Something that wasn't halal before, but has maybe the interest component has dropped, now becomes. So it's a constant process to build this ecosystem. And they had their launch in December. A material amount of their investors were from the community, and there were like non-Muslim investors who were like, ethics and crypto don't go together. Wow, this is like a crazy idea. You actually care about people. It's not just about greed. And a lot of the things even that they did in their launch was to make sure that you didn't get pump and dump phenomena. The team have very conservative bindings on them in terms of what they can sell, what they can do. So there's no way for them to get rich unless they deliver value to the community. So the last thing I'll say, in all of these things, incentive structures are absolutely critical. You cannot have good governance and ethics and good structures, sustainability, etc., unless you have the right incentive mechanisms. And if you have an ecosystem with good incentive mechanisms, then you will naturally harness human behavior into acting in a more ethical way. But if you try and do it with rules, you'll fail every time. Ethics, the source of ethics is Islamic finance, pretty much common with Abrahamic. And there's a technical process that at the operational level, you screen it. And then maybe one day you can even codify these ethics into a smart contract. Because right now, there's still, that's why it can actually never truly be decentralized, because we still need a learned body of people to make a judgment on ethics. But you can actually, in the future, have an ethical governance token. And every time a new product wants to be released or a new angle you go, the community can vote. This is ethical, this is non-ethical. So there is the prospect in the future of a truly decentralized autonomous organization with governance tokens for the ethical angle, governance token for tech angles, and it can truly run in the metaverse by itself. We're quite far away from that, but it's an aspirational goal for that and many other projects.
Yeah, fascinating stuff. So is there, is this landscape competitive at the moment? Are there other players there? Or is Marhaba really the sole player?
Yeah, I mean, look, I'm happy to say that they are the sole player. The Islamic finance sector is worth about 3 trillion in assets, with no crypto penetration, because Islamic banks actually are very profitable in their core business. The need to innovate, the need to change isn't necessarily there. Combined with the fact that the confusion around crypto, there's a lot of parties that say it's haram, it's speculation, it's gambling, it's criminal. So there's so much of this ethical confusion around the true nature of crypto that it's easier for them to stay out. Whereas in conventional space, there's 99 companies doing this, launching DeFi. Every third day, there's probably a new platform launching with a new token, and it's very hard to compete. The Islamic angle and the ethical angle is a complexity barrier. And as I mentioned, a lot of the market is motivated by greed. So it actually doesn't suit a majority of the market. But by trying to attract a new demographic who are ethically focused, values focused, community focused, we think there's a space there to grow and to operate. I mean, time will tell. Maybe we'll die in darkness, because we weren't greedy enough. I mean, who knows? But when you think about the social movement of millennials and Gen Z to be more socially conscious, I think there is an overlap. And one validation we have for this is not a huge data point, or maybe it is. Our Telegram community has about, I think, 45,000, probably millennials and Gen Zers, all crypto savvy, across social media in about 4 different languages. I think we're about 55,000, etc. Urdu, Farsi, Arabic, etc. community channels. These are people like you, Ramsey. These are younger guys, younger people who are want to explore the opportunities and the potential of the cryptoverse. And even from an employment standpoint, this is a massive sector of employment, a knowledge economy that people should be looking at. But they're asking about crypto and how can I do it in a way that's consistent with my ethics and values. So it's not an overwhelming data set, but 45,000 people is not bad, I would say, as a starting point. And of that 45,000, over 1,000 came into the initial offering to participate in the community and so on. So it's a highly loyal, motivated, ethically focused community. Can we grow it? I hope so, but we have a long road ahead, for Marhaba.
You've covered so many different parts of it, and as you're speaking and you're articulating this space, it resonates in a lot of different ways, and I think it can actually be it's complicated to express and to define a lot of these components. You're bringing in ethics, you're bringing in values, you're bringing in technology, you're bringing in an execution of something that is very complex, but marrying it all together in a way that actually engages customers and solves problems. So articulating it in the way that you have is actually resonating very much so. Just as a final point, where do you see the future of Marhaba? How do you see it evolving? How do you see, that combination that you're talking about of marrying all of these different components together, and addressing, you talked about greed, and greed was a fundamental issue that caused the financial crisis in 2008. How are all of these components coming together to create the future, and what do you see that future looking like?
So look, because the problem with ethical is it's subjective. And by sort of basing it a bit in theology, in some ways it becomes anchored. And so again, it goes into sort of macroeconomic and monetary theory, but I do actually think the incentive mechanisms around interest-based lending are a lot of the issues. So how it maintains that ethical standpoint, I think Islamic finance will always sort of be that anchor. How I see it evolving is, look, we are literally at the sort of 1%, 2% mark of penetration. And I don't mean Islamic, I mean just DeFi in general. I think it will easily get to sort of 25, 30% within the next decade, which is trillions of assets in terms of value. I don't think it makes sense for Marhaba or even other DeFi platforms to just try to start from scratch and go it alone. If you already have banks that have customers who trust them, then I think the evolution for Marhaba and others is to partner, is collaboration rather than confrontation. So, banks will do what they do very well. DeFi platforms are essentially tech companies, like the Intel inside. The customer doesn't need to know there's a whole bunch of DeFi protocols necessarily running. They'll be doing it all from their web app. But that's how I see economies of scale being achieved, that ideally in each country, we partner with a bank that shares our values and shares our ideology, and also is coming at, I don't want to spend 2 years educating somebody and convincing them they should do it. It's a waste of energy. But if there are people on the other side that says, wow, I get this, but we're not the right people to do this, who do we find? Then there's a sort of meeting in the middle in a perfect state of the world. The only wrinkle to that, and I don't know, we'll cross that bridge when we come to it, is incumbent banks are inherently part of an interest-based lending system. And if our ideology is to have an alternative and to decentralize, is there a way to still combine, two types of businesses and retain that sort of identity? Maybe it's a question of brand, maybe it's a question of infrastructure, I don't know. But for sure, I think collaboration is the way to gain scale and public acceptance to make it this sort of mainstream product. I think crypto, somewhere in this cryptocurrency falls within the mix, because you need cryptocurrency, whether central bank or otherwise, to gain the efficiency benefits. Otherwise, you've just got these two, bookends of incumbent infrastructure that defeats the point, frankly, of a lot of the tech.
Yeah, and there's an infinite amount that can be achieved through the technology, and changing the infrastructure of how we transact, which is really what we're talking about here. Any conclusive thoughts or any conclusive mentions you want to make?
If I think about Muslim countries, and unfortunately, I think there's a statistic, 70% or 65% of the world's refugees actually come from Muslim countries that have been destroyed for various reasons, either internal or external, etc. These people don't have access to financial services. They don't have access to wealth creation mechanisms. And so that's where decentralized infrastructure can kind of come in. All they need is a phone. And maybe the guy on this street corner can finance the business of the guy on the other street corner, who can then invest their wealth in a staking product to generate rewards because they're validating the network. Or maybe an artist somewhere can mint NFTs and generate revenue every time it's used. So because I think the humanitarian and the refugee situation is frankly quite traumatic and becoming worse, and now you've seen in the case of Ukraine how it's helping, this evil blockchain crypto thing is now actually helping, because now it's much more closer to home. The destabilization of a country and the refugee situation. So this technology can really help, I think, improve, frankly, the quality of life and giving people opportunities at that lowest level without you having to go and build a bank. in Yemen or Gaza or another place in the world. So that's the hope. There's an idealism there. Will we get there? I don't know, but hopefully we can make the world a better place. I know it sounds a bit glib, but I do believe for the first time in sort of 500 years, decentralization, cryptocurrency, there is the possibility of a different form of finance that maybe helps lower down the food chain. It's for us to take that opportunity. Let's see if we can make it happen.
Thank you very much, and it's exactly as well what we at Algebra are trying to achieve. Building the rails and the infrastructure to enable these communities around the world to have access to financial services, and that's as we're discussing, it's there's a process, there's a journey to get to that level of balance within society. There's a journey to getting to with decentralized finance, reaching all of these people, and partnerships like ours are an opportunity to try and achieve that in a number of different ways, and give the opportunities to enable better access and ultimately development across a number of contexts.